David, do you think this will continue, this rotation out of the mega cap tech stocks into other areas of the S&P 500?
I think you're going to continue to see that broadening, and I think that's good news. You need that, for the markets to sustain themselves. Doesn't mean you shouldn't own these companies. These are great companies, but the gap in growth between the Mag 7 and the rest of the market is narrowing, especially on the earnings front, with 68% earnings growth this year, and that's going to come down to about 16.5% next year. Right now, I'm tracking earnings estimate growth of about 12.5%. So that gap's only about 4%. So it leaves room for some other stocks to have a good day. Okay,
a couple of stocks that you like that are not Mag 7 stocks. They would be in the S&P 493. The first one is Expedia. Why do you like Expedia?
You know, we've all seen the travel-related names explode higher, whether it was cruise lines, airlines, you name it. And it's pretty clear, Paul, the consumer's alive and well, at least when it comes to getting out of the house. Expedia, what I like about this is it has the gross margins of a high-tech software company, yet it trades at the same value as a legacy retailer, 13 times next year's earning. High conviction pick for me.
And what about Tenet Healthcare? We've had a fair amount of negative sentiment around the healthcare sector recently. Why do you like Tenet Healthcare?
It's tough because, and as a portfolio manager, I have to have some exposure to the space, and it is a challenge sector, especially now that you have RFK Jr. coming in. It adds a lot of complexity to it. But one of the better trades this year has been the hospital sector, and Tenet has been a leader in this area. Analysts have gotten this company wrong every single quarter for the last 10 quarters. The average earnings beat was about higher than 19%, and they guided higher every time. 9 of those 10 times the stock was higher. At 13 times next year's earnings, it deserves a spot in my portfolio. I get that it's challenged and it's up against the health insurers in terms of getting paid, but I like management here.
What's your view on the broader U.S. equity market in 2025? Will we see the indices, most notably the S&P 500, push higher again after such big gains in 2023 and 2024?
I think so. But we need to see earnings estimates continue to rise. And the good news is that, post the election, we actually got a Trump bump, not just in price momentum for stocks. We actually saw earnings estimates climb higher by about $4 or $5 in the first week following that election. I need to see that continue because we can't live on just multiple expansion. We've watched the multiple go from 17 times forward earnings back in 22. Here we are at around 22 times. Maybe we can push a little higher than that, but as long as rates stay where they are on the long end of the curve, we need to see those earnings estimates continue to climb.